What group of homeowners will be the first to cut and run? What groups of homeowners will be the first to cut and run this time? STRs are already hemorrhaging cash and facing new laws that either restrict or outlaw them. They will be the first to hit the market. When? Next spring or early summer. And that 3 mortgage won't affect the price. LTRs are also turning cash flow negative, though not as widely or badly as STRs yet. But with rents falling and property taxes and insurance rising, they will be the next group of inventory to become available. Again, a low-rate mortgage will be irrelevant to the fair market value. Second winter homes and primary residences will be the last. Anybody that used their house as an ATM machine in the last few years. STRs are in a world of hurt some places. I think it is underestimated the degree that executors of the estates of boomers will be a big wave over then next decade. It's the 3 Ds. Death, divorce, debt. I guess a 4th D with downsizing. Run out? There will be a stampede on way out by investors in a year or two. Price cuts by desperate sellers will bring down comps for entire block. Fed has to stick to its words and keep its monetary policy tight. I am watching inventory slowly creep up with no buyers. The remote workers that moved out of state and bought a second home. Anyone who bought in the past year thinking rates would go down so they could refinance and their starter home monthly payment is $3,500 month. STRs and regular investment properties will take the biggest beatings. But like all things real estate, when the investor bought plays a huge role. Pre-pandemic rentals and even a lot of early pandemic rentals are doing well. As a lot of STRs are returned to owner occupancy, the remaining STRs will stabilize somewhere down the line. The path out for pandemic investors and homeowners is sticky nominal prices that are dropping on real terms as wages and inflation rise in nominal terms, but house prices will not in the short end. Maybe medium run. What groups of homeowners will be the first to cut and run this time? None. That's why we are going to have a crash bubble pop reduction. Everyone is so certain that they have enough money. Their job is good. And their properties will print. Everyone will hold on until it's completely unsustainable. Boomer STR owners are very close to being forced to sell. If the stock market sell-off continues, they need to recoup retirement funds. They're going to sell RE at near high rather than selling equities at a discount. All these blanket statements with zero proof lol. People with the least equity will have the most stress to sell unless they can afford their payments. Those of us who have owned a long time won't sell unless we choose to. We have the best options. STR will have a negligible effect as most of these homes are in touristy areas. If anything, it will call the greedy noob wannabe investors from the market while the experienced investors benefit. Hedge funds and other large investment entities. Because anyone would take a risk-free 5 any day over a risky 5. STRs. Plus rent is going down in my area because of so many vacancies. Airbnbs in cities where they're being regulated and pandemic boomtowns probably. The thing you are missing is most people have good mortgage rates. And the standards stated pretty tight, unlike 2000 or 2008. Normal homeowners aren't going to be going through a ton of foreclosures. That said, the Airbnb idiots in cities which have recently outlawed it may have things fall apart though. Commercial is in bad shape, so plenty of room for failure there. You will be disappointed to hear that many such STR homeowners have deep pocket of cash than you can imagine. Chinese nationalists who hold U.S. investment properties. In most cities that's a much smaller group, but yes, they will be the first to declare bankruptcy and run. The STRs in my area are hurting. Seeing 20% price cuts 100K frequently. Planning to get one as a vacation home. Anyone who bought in the last year with 10 down will be underwater any day now. Might as well bail and rent at the slightest move in unemployment for shift in prices. LTRs are also turning cash flow negative. No, not for the vast majority of rational landlords who bought before 2020 and have 3 mortgages. These homes are by and large throwing off tremendous amounts of cash. Rents are only a few % below their ATHs and about 20 higher than 2020. The fact is that there is a huge shortage of housing in the US, about 3M units. And with home construction slowing due to high rates, that shortage will continue. Anyone expecting a large price drop is tilting at windmills. Whatever ones are forced to this generation has no shame. Boomers relocating, downsizing, or moving to senior communities. Where exactly are you seeing rents falling for single-family rentals? To answer your question, I agree that short-term rentals are on shaky ground. Most STRs can convert to long-term rentals and still turn a profit. They'll just be much less profitable. I don't think the anti-Airbnb laws will do much at all about purchase prices. They may help reduce rents a bit in rental markets where a huge number of homes had been eaten up by STRs. The idea that owners will just sell property at a massive discount without looking into alternatives is a bit of a pipe dream emo. This post is peak hopium. Yeah, a subset of STRs will sell. Many others still holding all-time low rates will just convert them to profitable LTR instead. And long-term rentals are turning negative cash flow. Give me a break. Rents have skyrocketed the last 3 years. And most, if not nearly all, are cash flowing just fine. Haha, what people can I laugh at when something bad happens to them so something positive can finally happen in my own life? Get fucked. Anyone who has next to zero equity will be at risk if home prices decline. If anyone falls, I hope it's the REITs. I hope with high interest and low rent, REITs wouldn't be as profitable as a saving account. So people start withdrawing money and crash them. I see signs saying the opposite of will buy homes around Vegas all the time. STR owner here. I have 2 and I have no issues filling them. Will largely depend on the local market. I guess if it shifts I will just rent it out. It literally takes like 12 milliseconds to rent a home in this environment. If your hope is this deluge of STR hitting the market, you may be in for some disappointment. LTRs with low leverage aren't going anywhere. A more substantial decrease in housing values will start to flush out the highly leveraged LTRs. Though, for leveraged holders with minimal cash flow, 5-10 years of flat real estate values is the nightmare scenario and a quite likely scenario in my opinion. I would guess that STRs are much more vulnerable as the get-rich-quick scheme that is Airbnb is just about played out in my opinion. The next cycle is going to flush a lot STRs down the toilet bowl of history. To say nothing of the legislative risk faced by STR owners in many locations. 1. Those who borrow heavily from HELOC for consumer spending will be totally screwed. 2. Over-leveraged reinvestors who rinse and repeat buy investment property refi takeout equity. 3. Speculative buyers who rely on ARM to buy homes they can barely afford, all in hopes for a potential rate cut and wage increase in the future. Least affected are those primary homeowners who only borrow 30-year fixed